So we're going to ask you some things about that, and obviously all the exciting things that you're working on. So we'll get into that in just a second.
Can I get a coffee?
Paul, do you have the link set up so we can retweet it?
Yep, link is live.
Awesome.
And we are officially streaming as well.
Love it. Let me go see us. I want to go see how y'all look.
Go see us.
We'll be one of those pink rooms, right?
One of those what?
We'll be one of the pink rooms on X.
I think so, yeah. Because we got the video feed and everything. All right. I just retweeted it.
Chain link and added, pretty.
Luke, if we got to get you on X here, I think he does have an account.
Yeah, I'm
You're a big Instagram guy.
a big Instagram guy.
What's the name of the show?
So this is, I think we're doing this through Bitcoin Day's channel. We're doing it for Bitcoin Day.
Oh,
Right.
you're not on X. You're not on X Live.
Oh, yeah, we are.
Yeah, we're next live.
Yeah, Bitcoin Day.
But Bitcoin Day, I
IO.
believe, is the channel
Bitcoin
we're
Day.
streaming it
Got
for.
it.
For the Bitcoin Day, guys. Lucas, what's your X handle again? We're gonna get you some followers.
Oh, dude, I don't have my X set up yet. I'm trying to recuperate that existing account that I had, so I'm going through account recovery process.
Okay.
Otherwise, I'll just set a new one up. But I'm trying to keep it consistent with my Instagram handle. So
Yeah.
Grant,
you do most of your real estate marketing, all that stuff is on Instagram, right? Mostly.
We use everything, dude. I use, wherever they will allow me to communicate my propaganda, I will, I feel like it's my duty and my obligation to propagate those channels, those distribution networks that allow me to communicate the things I believe in.
I love it.
I love it.
I should have been like a minister or something.
You would have been good, man. Preaching the gospel.
I would have been
10X
good.
gospel.
But I'm selling. My religion is, success. I'm I want to see more people be successful, regardless of what God they believe in. You're living on a planet with gravity. It's tough. This is a tough place to live, man. I was just on with a guy, and he said, "Dude, it's never been harder." I said, "Yeah, it's never been easier. It's never been harder, and it's never been easier."
True.
But it gets harder if you don't have people to talk to, about the game, or if you have the wrong people to talk to.
Yeah.
Because most of my life, I could identify the first probably 35 or 40 years of my life, maybe even 50 years, bro, I was just getting the wrong information.
Yeah.
I was asking people for help. I've always asked people for help and read books and learned. I was just learning from the wrong people. And I didn't realize that until about 10 years ago.
What made you realize that?
I was in New York City. I walked into Goldman Sachs building. I'm like, oh, fuck. The fuck was I thinking? Shit. Damn, they had elevators. The elevators are bigger than most offices. And they had banks of them. They had an entire floor on one side of nothing that could, they go to floors. They have elevators just for floors. You don't stop at different places. They everybody that's going to 33, boom, get in that one. There's the thing could fit 100 people.
Wow.
And I was like, wow, this is other people's money.
Wow.
And I've been told my whole life not to raise money. I literally was on that trip that weekend, came back from New York City and opened our first fund. That was $1.8 billion ago.
That's very interesting. I'm kind of in the same spot right now where I bootstrap my company from the ground up. Haven't raised capital, have never raised money, and I'm just trying to figure out, what's the next step forward.
Yeah, if you're a good dude, if you're a good person, if you know how to manage money, if you're a responsible person, and you're going to take care of other people, raise money.
Mm.
Now, if you have any degenerate characteristics in you, like if you're a good spokesman but you cannot manage money well, then raise money but let somebody else manage it.
I see.
But don't touch a penny.
That's great advice.
I happen to be a tremendous promoter, but I'm probably better at managing money than I am promotion, and I think I'm great at promotion.
Wow, it's hard to believe because you're pretty damn good at promoting.
but dude, I don't lose money. Like I refuse to lose money. I don't care if it's your money, my kids' money. I don't care whose money it is. If I found money in a car, if I rented a car and found money in the backseat, I would make sure. To me, all money's money. And if you lose anybody's money, then you'll lose your own money.
Yeah.
And there's no such thing as just $1 or just $10 or just 1,000 or it's just a loss. No, it ain't just a loss. You made the wrong decision and you should have known it was the wrong decision.
Yeah. Yeah. This goes hand in hand with what just happened on Friday, right? I mean, so many people got liquidated out of leveraged positions. And Grant, you know, like in real estate, we love leverage to a certain extent. Are you utilizing leverage for your Bitcoin position as well, or no?
No, what we do is I have $5.2 billion worth of real estate under management. We only owe $2 billion of debt. So we're 40% leveraged against the market cap of the real estate and the real estate cash flow. So we cash flow about $80 million a year in free cash flow, repetitive cash flow. If something happens at the end of the year and we do have another event, great, it could exceed that. But now when we add the Bitcoin to a project like this project right here, this project, we bought this for $230 million. Mm-hmm. And then it was
200 Bitcoin, didn't you?
Well, yeah, this deal was cash flowing at 5% when I bought it. And what I decided to do was take the cash flow down to 3% by adding Bitcoin to the purchase. So what I did was I just took the $230 million purchase and asked myself, would you rather the asset with a 5% cash flow? You're trading $230 million for $11 million a year, but $11 million forever.
Sure.
That'll grow with rents. Or would you rather take the real estate, add 100 million of Bitcoin and only get 3% a year? Mm-hmm. So look, I'm a coward, dude. I don't want to lose money, but I'm like, shit, man. The difference between 5 and 3% is only 2 points. Mm-hmm. It's going to cost me a couple $1 million a year to own $100 million of real estate. Mm-hmm. I'm to own the Bitcoin in addition to the real estate. Now the Bitcoiner is going to say, dude, you should just buy $300 million worth of Bitcoin. I'm like, okay, but then I'm not a real estate guy anymore. And my business is real estate. And I'm adding Bitcoin to see if I can get both of them to dance together.
I love the fusion of the assets. Have you met CJ before? There's a reason we brought him on because he's doing some really cool stuff with real estate and Bitcoin. So I want you to
tell me about it, CJ. What you doing, man?
Grant, pleasure to meet you.
Good to meet you.
Well, I think what you're doing is even more important because I think they're not just going to dance; they are going to put on the star performance, the star tango. What was your line of thinking as far as reducing from 5 to 3%? Is that cash flow a core critical element? Does distribution mean a lot for your investors? Or was that kind of like a first go round here? Just to see
it's a great question. This was our this was our 12th deal this year. We have done, the public doesn't know this, but we've done a bunch of variations of this. Our first deal we bought, it was $72 million. We paid cash for the real estate and I added $15 million of Bitcoin. So the reason I did that one, CJ, was I was experimenting. One, hey, how will my audience respond? You know, will people want to put money in this deal? And then the consideration was, I'm not going to exceed the replacement cost of the asset. I was buying a brand new asset The asset cost 88 million to build it. I bought it for 72. I stole it. And I'm like, I'm going to put enough Bitcoin in that deal to not exceed replacement costs. And so that was the thinking. Okay. As I started playing with models though, on that deal, I did that deal in January. I bought $15 million of Bitcoin that's worth 30 million today. Okay. I should have done $72 million purchase and $72 million of Bitcoin. And because I would still have a cash flow of 3%. I wouldn't have a cash flow of 5%, but I'd have a cash flow of 3%. There's no big difference. And I'm still in a great assets. Like the Bitcoin could fall to 0 and I'm still good. It's not like what these degenerates did on Friday. My leverage is so positive. It's not a yield. Like Mike Saylor talks about a yield on his Bitcoin. This is real cash flow that comes in monthly with a real asset, a real business, real tenants, and a real product.
Yeah.
And I love what Saylor's doing, by the way.
This is treasury company is Bitcoin strategy thing. The current
DJ,
company have
you're breaking up.
As soon as I texted you, try to turn off all the other browsers on your laptop, whatever you have going.
all right,
Your quality right
let
now
me
is not.
just make some changes.
Yeah, I thought it was me.
No, yours is looking good. You got that fiber.
I got that 10x fiber.
Let's go.
Yeah, I'm really fascinated by a lot of the stuff that's happening, pairing Bitcoin with other asset classes and other products. Like, for example, I think you mentioned Meanwhile life insurance. That's another example of utilizing Bitcoin's utility. We actually interviewed Zach, I believe, as well. I think Zach Townsend is his name. He's a really cool guy. And I think they're going to be coming to Bitcoin Day in January as well. So we'd love to have you there as well, Grant. I think Gary's been to a couple so far. So
Yeah. When is that deal, Maddie?
So I believe it is
November
January. Is it 15th or 21st? Do you know what it is, Paul?
I believe it's the 17th of January.
17th. Yeah.
Yeah, I'll try to make it. Where is it?
Naples, Florida. Beautiful
Okay,
place.
how do I get a seat to it? How do I get a ticket?
Well, we might be able to get you in. I know a guy or two.
Well, my audience might want to buy a ticket though. How do you actually buy a ticket to it?
Amazing. Yeah, you go to bitcoinday.io and you can get early bird tickets there. We're going to have some awesome people in attendance, from Jeff Booth to Larry Lepard, Adam Back, and Grant Cardone. You actually are joining us for another event coming up sooner, which is the 6th of November in Naples. And at that event, we will have none other than Michael Saylor and the man, Grant Cardone. So that'll be
fantastic. I didn't even know I was coming to that shit. I
I
can't
love
wait.
that I'm telling you about your schedule, right? Isn't that something? Your team, let's just put it like this, Grant. You've got a great team, and we're excited to have you there.
Oh, that's awesome, man. Well, a lot of people say they want to work for themselves. I'm like, bro, there's no such thing as working for yourself.
You got that right.
God doesn't even work for himself. God works for everybody.
I check my damn schedule and I just see stuff on it every week. I'm like, what is going on?
Yeah.
I've reconnected, guys, in my
wow, look at you. Wow, look at that pretty face. We didn't even know what you looked like, CJ.
Oh, it was that bad? It's much better now?
It was pretty bad, dude.
Okay.
We thought you were in like Mumbai or Nigeria or something.
Feels like it. So I wanted to get back to what Grant is doing, because I don't want to get lost in small talk. I think what Grant is doing is big time. It is a game changer, and it is what Bitcoin treasury companies are missing. The most important thing he said is, we paid 230 million, but what did you buy? 11 million year over year of cash flow. Mm-hmm. And it's that cash flow and the management of that cash flow and how you allocate that cash flow that differentiates this strategy from the existing Bitcoin treasury companies. Because the existing Bitcoin treasury companies, they have to dilute shareholders or they have to issue more debt. And the only other company that doesn't need to do that is MicroStrategy with their preferreds, where they can use the mark-to-market price of the preferred to either offer a higher yield, which the market should naturally demand and buy that up to that 100 price, or it goes over 100 and they sell into it. So their most recent buy I think it was like $27-28 million aggregate across all the preferreds. They were able to raise that and buy it without diluting or issuing more debt. But Grant doesn't have to dilute or issue more debt. And if he is issuing the debt, much like the Bitcoin secures the debt, the real estate secures the debt. So you have that lower amount of risk there, but you get the cash flow. And that is really the game changer that I think is missing in the Bitcoin treasury company space. And that's why, at People's Reserve, we're kind of like a meet in the middle. We're not doing what Saylor's doing. We can't do what Grant is doing, but we are taking real estate in the form of residential real estate. And by combining it with Bitcoin into a Bitcoin powered mortgage, we get kind of a mini, I would say it's a mini version of what Grant is doing. Grant is getting, luxury 5-star places that are multifamily. And we're more focused on the residential, but that is the future of it. It's going to be cash flow oriented, because cash flow is, just like Grant said, you don't run a business by yourself. Any business owner knows that you're nothing without your team. Well, you don't create cash flow by yourself, right? There's always, and especially in Bitcoin, if you're talking about Bitcoin yield, and not in terms of Saylor's way of yield, but in terms of the traditional thought of yield, then you're going to have counterparty risk. And you don't want to have that counterparty risk. And if you have to have counterparty risk, you want it to be mitigated to the furthest extent. So that's why I think what Grant is doing.
CJ, and I think that this is what a lot of people miss with what Michael's doing. They say they're replicating what Michael's doing, but in truth, they're not, because Michael had $75 million worth of EBITDA when he started doing this. Okay. The first thing he did, if I'm right, I could be completely wrong, by the way, I'm just a student.
You're talking about a software company, right?
Yeah, he had a software company with customers, with accounts, with contracts, with income, with products, with employees, and he had EBITDA of $75 million a year. He converted what was ever on his books. I think the first thing he did was convert a little tiny piece of his cash, and then he got a more aggressive as to what he was doing. But he started with customers. Most of the treasury companies are starting today. There's no product, there's no service, there's no customers, there's no accounts of receivables. There's nothing. And this is my biggest concern. Like, we're going to take our company public. We're going to take these Bitcoin real estate hybrid funds public. One, I'm concerned about being called a treasury company, even though that was the original consideration to call it a treasury company. But my biggest black swan concern is that there's going to be something terrible happen in this treasury space, and it's going to gut, and it's going to gut the space. It'll suck it out. It'll be a Friday on steroids. Yeah. And it will be a long duration event, not a 20-minute event. And then it'll cause people to not want to touch the space, particularly at the same time I'm trying to go public.
I do think though that there is a natural economic denominator here, and that is the cost of capital. So the big trade here is that these companies can keep getting a cheap cost of capital. They can then securitize the Bitcoin on their balance sheet as a hard money that has a compounding annual growth rate greater than the cost of capital. So what we should really be watching for something what Grant just pointed out, like definitely that is a valid issue. And when the arbitrage opportunity gets squeezed to the extent where these companies that can't compete with Saylor, can't compete with cash flow, they're going to have to, there's only one way to increase demand, and that's to offer a higher interest rate. So they have to increase that interest rate that they're offering on their debt issuances to attract the borrowers. And then they have to hope that Bitcoin's CAGR outperforms their cost of capital. If not, and here's the caveat, if not, they're going to lose money and NAV will go below 1. But here's kind of like the magic. I think this is kind of like the risk adjustment factor, Grant. Like you would expect if someone got into a bad property, if something didn't work right and you get liquidated, there's going to be a lot of pain there. But the NAV on the balance sheet of a Bitcoin company is the actual Bitcoin. So even if this company fails, it's going to be because of the management team. It's going to be because of a bad debt issuance or decision. And other successful treasury companies, I think ones that ultimately are working towards what you already have in the real estate portion of your public offering, which is the cash flow. They have to create some type of, like for People's Reserve, it's our Bitcoin powered finance ecosystem. Yes, we have customers. Yes, we have cash flow. Yes, we have revenues because we offer products and services that the marketplace needs, that the marketplace sees the value prop of our system and then joins in, and then that creates the revenue. But when you don't have that, the only thing you have is Bitcoin. And if you do something wrong, your MNAV is going to go negative. Now, what's so interesting though,
and CJ, can I just say that you know there is going to be a day where that happens without without any fraud in the system, and there's going to be guys that are going to be heavily well funded that are going to go grab those companies that have nothing but a Bitcoin treasury.
This is, I'd love to get your thoughts on this, Grant, because we you know, at People's Reserve, we don't know what to call ourselves. So we just call ourselves financial engineers. But we've been thinking about building like what we call a Bitcoin business bond. And I think it could technically change the way startups actually work. So, you know, one of the biggest arguments, especially from the Keynesians, is that, you know, if you have a Bitcoin system, investment will dwindle, the economy will slow down and things like that. But with a Bitcoin business bond, when you're a startup company, you literally just ask for a little bit more than you need, and you put that extra part in Bitcoin, and Bitcoin is on your balance sheet held in escrow as part of the original startup bond. And that way, if the startup fails, if there's bad management, if there's fraud, or it's just a bad idea, there was not product marketplace fit and it fails, eventually the CAGR of Bitcoin will actually get to the extent where the bond can mature and all the investors are paid back the original nominal investment value. So for, you know, for some people who think that if Bitcoin is the foundation, the core of the system, investment will falter and therefore the economy will shrink because nobody will take risks, nobody will take chances. Yeah, but when you take Bitcoin and you incorporate it into a startup bond and it de-risks the startup investment, perhaps we might be in a situation where there's going to be more startups. There's going to be more risks that are going to take. There's going to be more good ideas that can actually be pursued because Bitcoin is being used as a de-risking collateral, as a de-risking asset. And I think the marketplace just isn't there yet, but I see it happening through what you're doing, through what we're doing, and through the redefining of risk in the credit marketplace.
Very interesting take, CJ.
I mean, failure is like part of the system, right? It's funny because the Keynesians, they're like, we can't fail. We got to bail them out. It's too big to fail. Just print the money and give it to them. And then they're the ones who are saying, yeah, but there'll be too much failure in a Bitcoin system. There won't be anybody taking chances because you just save. You just save. Who's going to invest? Who are the investors going to be? But when you create structured products like this, and this is the other thing too, like with AI and everything going on, you're still going to look people in the eyes and shake their hand, right? I mean, I look forward to meeting Grant down at the Naples family office at Symposium, shaking his hand. And if we ever did business together, I'd look him in his eye and I'd shake his hand. Not everything is going to a smart contract. Not everything is going to be a 0 and a 1. That's not how business gets done. So for us Bitcoiners, for us who are adopting the technology and looking for ways to leverage the technology to empower our investors and to empower our portfolios, we really do have the chance to create new types of contractual agreements. And when you incorporate Bitcoin into those contractual agreements, we almost begin to redefine economic thought. Yeah. And I've yet to hear a rebuttal from the Keynesians on that one.
That's a really interesting idea because I've been thinking about this as Bitcoin evolves. And I look at my portfolio, I'm like, why would I invest in anything else? Why am I going to go invest in that new hotel or this new startup, right? So what you just mentioned of having Bitcoin as collateral and a fallback plan for all those businesses and startup, I think that's brilliant. And I think people would be much more receptive to taking other risks. And perhaps maybe in the future, the way we invest is more in things that are aligned with our interests, right? Where, hey, you know, here's this new startup, we hold Bitcoin and we're looking to establish this type of community. And hey, I align with that. So therefore I'm going to invest. Like a perfect example was that, you know, BTC in DC, right? What's the startup with the carnival doctor, Maddie, that,
Dr. Sean.
That's
our buddy
Rivero.
Yeah.
It's Rivero, yeah.
Yeah, that's a perfect concept, right? What if
And,
he
and
had
Grant
BTC
has
in his
his
balance sheet?
10x health as well. There might be some overlap there.
Yeah.
Grant, you know Sean?
Do
Sean,
I know Sean? No,
Sean
Sean who?
Baker. Sean Baker. He's the carnivore diet. Have you heard of it?
No, I don't think I know Sean. I might know of him, but
Yeah, he's a good guy. My legs are still sore from all the sprints we ran.
The guy's a badass. He was outspoken early on. He's an orthopedic surgeon, and he realized how he could prevent people from ever coming to the operating table just by giving them lifestyle advice. And then he essentially had his license taken from him and was ostracized by the big pharma industry. And Joe Rogan platformed him twice to share his story, and he is now 60 years old, setting world records, all around American badass. Y'all two need to talk. He just launched this smart digital doctor app called Rivero that is incredibly cheap, 150 a month, and his whole thing is that within 3 to 6 months he never wants to see you again. Right, that's his whole angle, and he does it all through research and data. He's licensed in all 50 states. You definitely need to talk at some point. Great guy.
yeah, love to meet him.
Yeah, I think they're doing a raise on Republic right now as well. So shout out to that. If you want to invest a small amount, if you're just an average guy and you just want to support something positive, go check it out. Republic is like the crowdfunding app where the little guys get to get in on some good ideas before they go through all the VCs and the series, all the other before it goes to the stock market, and then all the gains have been made. So,
Hey Grant, while we have you here, I'd like to get your take on commercial property. I know that you're crushing it in multifamily, but what's behind the scenes at the highest levels with commercial properties and vacancies, and what's the plan there?
Yeah, so it makes me think also of back to what you were talking about, what you guys are doing right now at People's. I see a day where the investors are going to be like, dude, I'll give you $1 million, but 100 of this has to buy Bitcoin, right? I could see that happening. Now the founder is going to be like, oh my God, dude, I need advertising, marketing, people, expansion, blah, blah, blah. I need every penny for these other things. Okay, good. But if 100 grand keeps you in the way of your startup, then you probably don't have a business anyway. Now, I think an easier place to go with that is going to be PMI. A massive opportunity will be, if you don't put 20% down on your home, you're forced to buy a piece of shit product called PMI.
I actually wrote an article about this like 8 years ago in a local Naples paper. CJ, did you ever read that article? I know we talked about this before.
I didn't get to read that one. No.
It's mortgage insurance. It basically, you didn't put 20% down. We're going to give you a loan. We'll give anybody a loan for anything, right? Mm-hmm. Yeah, but they're going to sell you a garbage piece of insurance that's going to cost you another $400 a month, $4,800 a year on a $400,000 loan. That guarantees the investors get paid back their mortgage. Mm. That should be something that goes up in value over time and insures both parties. So that would be that's
very interesting.
When we were at BTC in DC after the thing, this is exactly what I told Joe Gruters. I told Joe, I said, Joe, we'll fix the housing affordability crisis very easily. You scratch the PMI and force a BMI, and with one executive order,
very interesting.
What happens is I just sent out a tweet about it. Maybe I'll comment it under the show so everybody, because I ran the numbers, I did the math. I believe it's about $21 per 100K loan, somewhere around that level. But when you pay into that month after month after month after month, and then you compound that growth after a decade, the BMI would actually, because it was put into Bitcoin, it'd be worth more than the home itself.
Yeah, exactly.
So it could be.
You end up with two assets now, not one. This is the problem in America. You're investing in one asset, you sell the one asset, you end up with zero assets. Same thing with buying a stock. You buy stock goes up. You buy Apple at 100, it goes to 1,000. You sell it at 1,000, you're back to zero again. You start a business, you sell your business, you got no business again. You keep going back to zero. That's why you asked me about the commercial real estate, the condition. It is tragic. It is trillions of dollars trapped. Office is a problem. Hotels are a problem. I mean, these are all opportunities, by the way, if you have money and guts and a plan. Trophy real estate, like I buy these trophies. The bigger you can go, dude, the bigger the problems are. Okay. You have guys, REITs. There's $4 trillion of REITs in this country that underperform pension funds and institutions and their private equity that was put into this. Like the problem's endless. And Bitcoin had people own Bitcoin 4 years, 8 years, and 12 years ago, put a tiny bit on their project.
Yeah.
In addition to their project, they had cost overruns anyway. That's the crazy thing. Oh, dude, we can barely. I'm like, bro, you already had a cost overrun. You could have you would have bought this other thing, this insurance product for yourself.
Yeah.
You know, that you had an engineer, you had insurance on your project, right? You had a 15% builder's loan on it. So to answer your question about what's going on there, the office space is a phenomenal opportunity right now. Phenomenal.
Are you already seeing that space start to come back, Grant? I know rates have come down a bit in the last 12 to 18 months.
This should have sold for $300 million. I bought it for $230. I'm $70 million in the money the day I bought it.
Wow.
If the interest rates were where they should be today for activity to happen, this asset would have been 300 to 350 million. I paid 230. I bought it out of bankruptcy.
Wow.
So you're going to see more and more of this to come. This is not a distressed asset. This is a distressed seller with a trophy asset.
Yeah.
And the bigger they are right now. I have a list of 15 of these right now I could go get today where they have trapped equity, okay, where the owners it's maybe 2 or 3 rich guys and they bought this trophy or built it and they're sitting, it's worth 400 or 500 million and they have 200 or 300 million of equity sitting there just dying. And we would go to them and say, hey guys, I want you to trade your asset for shares in my real estate Bitcoin company. I'll bet you I end up with 20 trophy buildings that get donated to my public entity.
That's actually genius.
They're going to be like, take it.
Yeah.
Okay, there's going to be
it's an in-kind redemption almost. It's a lot. I had some Bitcoin whale.
It's a hope note, dude. It's a hope note. It's like I cannot liquidate my asset. I don't want to because if I tried to right now, I'm going to get killed.
Yeah.
So I'm going to trade you because you have basically frozen equity. There's $38 trillion sitting with Vanguard and Merrill Lynch and Fidelity sitting in IRA accounts that people have abandoned. A third of the money that I've raised is right out of 401ks. Okay, wow. The 401k was not good for America. It was good for Wall Street. Single family homes, not really that good for Americans. Not on a return basis, not compared to other things they could have been invested in. I think there's like $15 trillion sitting in dead equity in single family homes.
Yeah.
This should be invested, man. This money and reinvested in actively doing something for the American people and not just making Vanguard and Charles Schwab richer could produce unbelievable wealth for the American people. And number 2, solve a lot of problems at a government level.
Yeah. That is the one knock on real estate is that, it's a liquid and like a lot of times you can get in these situations where there's massive liquidity that you're describing.
That's exactly it. And that's the issue I'm personally running into. And Grant, I didn't take your advice in not buying residential real estate. And now I'm seeing the repercussions of that in the sense that my residential real estate has done well. It's just, I can't access that money. Right. If I want to go to a bank, it's going to take me 60 days. They're going to put some 8% interest rate in there. It's a logistical nightmare for me to access that money. And it also goes on the topic of leveraging against Bitcoin and how easy that is compared to real estate. I could get access. I could get leverage in my Bitcoin in less than 2 minutes on my phone compared to real estate and how illiquid it is. And I think in the world that we're moving into, things move fast, right? An opportunity might come up where I don't have 60 days, right? So I think I think the liquidity factor is the unattractive part of it. You're
This is
absolutely
something
right.
that we've been getting a lot of inquiries at People's Reserve. And we call it a home equity Bitcoin line of credit because we'll let you unlock that trapped equity, but we don't put it back in your pocket. You must buy Bitcoin, and then the Bitcoin helps collateralize and secure the loan. So title of the property as well as Bitcoin will secure the loan. Yeah, basically we want you to transform the wealth inside your walls into Bitcoin. And
how much of that will you do, CJ?
As of right now, I think this next year will probably really small time, around 50 to 60 million.
CJ, when you're going public, what's the update there?
For what?
Sorry, I missed you, Maddie. What was that?
When are you guys launching? When are you guys going public? How's the due diligence with all that coming along? Got any updates for us?
Yeah, it's coming really well actually. So I made a deal, and the merger company gets to disclose. I mean, it's part of NASDAQ disclosure that they disclose anyway. But by the end of the year, we'll be ready to rock and roll. We'll be live on NASDAQ, and it's gonna be amazing because we'll finally have a Bitcoin treasury company that has a revenue stream that can be used to accumulate Bitcoin the same way Grant is. But one thing that we want to do too, and I think this is part of, Grant astutely pointed this out. If you have your Apple stock, right? Apple's sitting on billions and billions of dollars of cash, and they don't ever do anything with it. One of our missions is to get rid of this buyback philosophy. Like buybacks really don't help anybody except the C-suite executives who get to sell their stock options at a strike price better than that higher price after the buyback. They get their bonuses. And of course, the registered investment advisors are happy because assets under management goes up. So management fees go up. But the buyback scheme, the buyback idea, I don't believe that it actually delivers that much value to the shareholder themselves. And if you want to recognize a gain, like Grant said, you have to sell. And the whole idea behind it is, well, if I want to recognize my gain, I have to sell, then I have to pay capital gains. Why are you not paying dividends? Oh, well, we're not paying dividends because we don't want to create a tax burden for our investor. Yeah, but if you want them to recognize any gain at all, they have to recognize a tax burden. So it's a really bullshit excuse of using a buyback strategy to enrich C-suite executives and increase AUM for RIAs. Our goal at People's Reserve is to just completely redefine that line of thinking, much like Bitcoin redefines your line of thinking on what money is. We believe that if you invest in People's Reserve and we make money, you make money. It's that simple. So we will shoot to have a ridiculous dividend ratio that I'm sure all the talking heads on TV will be calling us, stupid. And just like Saylor, 5 years ago, they're laughing at him. He doesn't know what he's doing. 5 years later, everybody's copying him. I believe the same thing is going to take place here. There's billions and billions of dollars in the stock market right now looking for yield. That's what it needs. It needs yields. It needs cash flow. We have our Bitcoin in cold storage for long-term exponential growth. We need opportunities like Grant is putting forth to get secured cash flow. We need companies who are taking revenues and paying back dividends to create cash flow. And the last time I checked, there was maybe $450 billion just in the, I don't mean to pick on anybody here, but the yield max ETFs. There's other issuers of these ETFs. They're basically just stock option strategies being sold at a premium because they're just selling covered calls and recycling principal back to the buyers of the. But what does it tell us? It signals to us people need cash flow. You cannot avoid that was my big thing at People's Reserve. How did I learn? What experiences did I go through that led to the creation of our solutions? Number one, I paid 100 Bitcoin for my house. Okay, that's a big freaking problem because my house is not even worth $500,000. I bought a single family starter home. This is my first home, 100 Bitcoin. That's ridiculous. That's a problem. Okay, we can solve that problem by creating a Bitcoin powered mortgage that lets me unlock the purchasing power of my Bitcoin without giving up ownership and eliminating that liquidation risk. That by cross collateralizing the real estate title with the Bitcoin, even if Bitcoin went to zero, which we all don't believe that's going to happen, but even if it did, no liquidation, no margin call, because the loan is still secured by the title of the property. So Bitcoin's role in the contract is just a measurement of risk. And if the price of Bitcoin goes down, your rate can adjust up a little bit. If the price of Bitcoin goes up, your rate's going to adjust down a little bit. And it's a way that we can integrate Bitcoin into this contract to open these things up. But what was the other thing? I bought my house for 100 Bitcoin, and then I'm like, shit, I need to pay taxes. I need to keep this thing. I need to upgrade this. I need granite counters. I need this. I need that. I got to pay my bills. Damn. And this is how I met Charlie Shrem, right? Like I went back to work. I had plenty of Bitcoin. I went back to work because I didn't want to sell my Bitcoin in the middle of a bear market, especially after I had to buy my house with Bitcoin. I'm like, this is ridiculous. So what do I need? I need a contract that lets me unlock the purchasing power of my Bitcoin, and I need cash flow. That's the problem that everybody is facing in the marketplace today. And companies can come out and say they're doing this and they're doing that, and they'll have to market to you in order to sell the value proposition of their product to you. Grant doesn't need to market. He doesn't need to do anything because it's the properties themselves that market themselves. It's a luxury property. It's going to consistently generate 11 million plus. And as rents go up, it's going to be more and more and more. You get consistent cash flow secured by luxury property and an all-star management team. That is the kind of solution that the marketplace is looking for right now, because that's the problem we face. It's an inflation problem. Shit's getting more expensive. Prices are going up faster than wages. I need to supplement cash flow. I need my investments to not just go up in value so that I can sell them one day. I need them to produce something so that I can maintain my standard of living and my quality of life, and even better, increase my quality of life and standard of living. And that's really what Grant is doing, what we're doing. That's the real mission of true entrepreneurs in this marketplace.
Love it.
Very cool. Let's shift gears a little bit here, guys. Let's talk a little bit about current events. Grant, I know you're on the record saying that Trump deserves the Nobel Peace Prize. There's a lot of stuff happening in Israel and Gaza today. There's supposedly they've released all the hostages, so that's a good thing. And hopefully we'll have some peace finally in the Middle East. At the same time, on Friday, we had a shock announcement about China saying that they're going to put controls on these rare earth metals. And, Trump put out a comment and the markets went down. And now, they kind of walked that back. I guess they clarified that, they're not really going to do this and it's not going to be that big of a deal. So that comment was walked back. The markets are back up. What are your thoughts on all this, guys? Grant, why don't you start off first?
Yeah, that's Trump doing his thing. This is what Trump does, and this is what he's so good at. And I don't think the Trump tweet is what triggered the market the other day. I know a lot of people think there was people calling it a black swan event. I'm like, bro, that ain't a black swan event. Okay, 9/11's the black swan event. Okay, so.
Yeah.
What do you know?
Him meeting with 800 generals a week and a half ago is concerning, and then all this happens. That's interesting to me. I don't know why anybody. If any of you think he met with 800 generals to give them a new fitness test, if you think that what we saw is what they met for, then you're way more naive than I am. But you have the China thing this week. But that's Trump. That's what Trump does, man. Trump's great at it. I love what he does, and he is a man of peace, by the way. So,
yeah.
Man, there's so much more we'd love to hear from you on, Grant, but I'm being told that you have to run. You have another call. So, guys, while we're here, take advantage of this special discount code to Bitcoin Day that we just launched for this.
I didn't even know where that voice was coming from. Where's the voice coming from, dude?
He's a producer.
I'm the man behind the scenes. Guys, use code Matty Ice, Matty Ice, MATTYICE. Not coming for your illegal migrants. Matty Ice is going to be how you get a 10% discount, actually a 21% discount for Bitcoin Day, and that is coming up in January. We hope to have you there.
I asked for a 69% discount, but they said no.
So,
right. You 69, dude.
I just wanted to say thank you so much once again for your time. I really appreciate you. We understand you have a very busy schedule. It's always fascinating to sit down with you and learn what you're doing, and much appreciated. And we look forward to seeing you hopefully next month.
Yeah, I look forward to seeing you guys over there. Thank you, guys. I wish I had more time. Thanks.
No problem, brother. No problem. Thanks for being on. We'll talk soon. CJ and Lucas, if you guys want to hang on for a little bit longer, we can just chat a little bit about everything and we'll close out.
Let's do it. CJ, man, super cool. I run a residential real estate team here in Seattle. We do about 150 million in volume a year. And it's interesting because I have clients now that they're very heavy in Bitcoin investment and they want to invest in real estate as well, right? You eventually get to a point where, okay, well, you know, most of my wealth is in Bitcoin. I want to diversify to some capacity. A few questions on your products, like, so let's say someone offers, they hold 10 Bitcoin and they put that down as collateral. They want to buy a house. Are you guys doing a 30-year amortization like a regular mortgage on that? How does it work? Walk me through that.
Yeah. So right now we do 5, 7, 10, and 15 with no prepayment penalty. So you probably would want to go with the 15. We do. I think we're going to get the 30s though. I do think we'll get the 21st, but I do think we'll get the 30s because we're actually in the process of creating a collateralized Bitcoin financing obligation. So not only will you be able to underwrite Bitcoin loans that are backed 1-to-1, so that's a big advantage of the platform right now in the marketplace. You want to buy $1 million home, you're going to need to put $2 million down of Bitcoin because you want to get that 50% LTV. Because you're going to be dealing with that liquidation risk I had brought up before, which we also eliminated. But with us, it's 1-to-1. So if you're going to post $1 million of Bitcoin, we'll give you a pre-approved purchasing letter, and you can make a bid on a property up to $1 million because that's going to be your pre-approved purchasing amount. And if you're running a team out of Seattle, definitely get in touch with us. We have something called the Digital Real Estate Association, and members of the Digital Real Estate Association, we call them Dream members. What we do is when our clients come to us, we aren't nationwide. My team is headquartered here in Southwest Florida. So we bring on people like yourself and your team to represent the People's Reserve Private Real Estate Equity Fund called TrueFi, which is really the magic that makes this happen in the background because we are not a lender. We are a private real estate equity fund buying the property cash and then seller financing the property to your client.
Got it.
So we don't ever put a penny into your bank account because it's a seller financing contract.
I see. That's actually brilliant because you guys are protected in case because you hold the asset technically,
Absolutely.
So that's brilliant. That is so genius. Okay. Very cool.
I'm glad I can make this
a little bit of a workaround because of the way things are set up because of the fallout around 2008. But what's amazing about it is that there is really no limit to how many seller financing contracts you can write. And we actually just found out a couple of weeks ago, we will be able to do this in New York and California. So New York and California are two states where the Bitcoin lenders are just not operating.
You can do this in communist countries now? That's incredible.
So we are, since we're not a lender and we are just buying property cash, we can actually operate within these states. We can actually be fully regulated and within the state statutes as they're currently written to offer this product. So for those of you who are in New York, in California, or even Washington has been very anti-Bitcoin, you are able to take advantage of this product. Only post the 1-to-1 to actually get into the property, and then not have to worry about liquidation risk. And then over time, and Lucas, I think you'll love this because all Bitcoiners end up loving this. Our interest rate, our starting interest rate, it does depend on the loyalty level that you have on our platform. So if you don't have any of our loyalty tokens, you're at basic, which is 10.5. And if you have a diamond loyalty, you're starting at 7.5. However, we also allow you to over collateralize the loan in order to get a lower interest rate. So we will allow for 200% over collateralization. Or in other words, we will allow for a 33% LTV. And then at 33% LTV, you're able to get 3.5% interest rate as a diamond member. And at basic, that brings you down to 6.5, which would be right around where we are in the traditional market right now with prime minus 100. So even with no loyalty tokens, you're getting prime minus interest rate, which is not available in the traditional Bitcoin lending marketplace. But with tokens, you're getting 3.5%, which is the cheapest cost of capital for home buyers in the entire world.
For sure.
And why are we able to do, the next question people usually ask me is, why are you able to do that? How are you able to do that? Well, because we've sourced LPs who know that the real risk-free rate of return is credit that's tied to Bitcoin. The traditional credit market, the proof of promise is worthless. Promises can be broken. This is why Fannie and Freddie have to buy all the MBS, all the mortgage-backed securities are basically backstopped by the government because they are a really high risk, low reward product, right? You want to buy a 30-year cash flowing product that creates a negative real rate of return when combined with the real rates of inflation. No lender wants to do that. So negative risk is the output. So if your real rate of return is negative, right? So for people who are listening, a nominal rate of return is what you see on the paper. The real rate of return is in terms of purchasing power. So if you're getting 4% on a government treasury, but the prices are increasing 10%, your real rate of return is negative 6%. You're buying 6% less stuff with that purchasing power. So the cost of cash flow in this Keynesian hyperinflationary economy is negative real rates of return. That's the price you pay to add cash flow to your portfolio. So it's hard to beat that. We do have the Bitcoin bond designed specifically to create real positive rates of return. But if you're a lender and you want exposure to real estate and Bitcoin, you're not going to be able to get a real rate of return. We've already seen that now. This is why the housing market has slowed down to a halt, because even at these interest rates, which are still not high enough, you're getting a real negative rate of return and there's no affordability. So rates can't go higher to create that real rate of return because affordability gets crushed and prices would collapse. So it's a balancing act, right? So the lender, the more important person, everybody wants to borrow. Hey, you going to lend me money? Sure, sign me up. I'll make a promise. But the lenders, right, the people who have the money and can't create it out of thin air like a banker, they have to deploy capital with risk at mind. They can't call up the government and say, hey, you got to bail us out or everybody loses. Wire the money in, create the bank term funding program, do whatever you need to do to bail us out. These capital allocators don't have that backstop. So they need to find products with negative risk. And with the seller financing contract, the title of the property secures the loan. The Bitcoin collateral secures the loan. That creates a huge win for the lender. And is it really just about value extraction? No. And I think that's where the Bitcoin ethos comes from, right? People ask me all the time, aren't you worried about the bankers competing with you? No, because their entire system is based on extracting value. Every single product and service that they create is designed to extract value. I think when we get Bitcoiners in there like ourselves, who are the entrepreneurs creating the products and services, more importantly, creating the contractual agreements, then we build these contracts in a way where we deliver value. And that's what removing liquidation risk is all about. That's what getting a lower interest rate, because you're posting pristine collateral. And when you account for the property title and the Bitcoin, it's an under collateralized loan. These types of mechanisms built into the contract are what Bitcoiners are going to be best at. And what the TradFi guys, the TradFi bankers hear this, they go run and hide in the closet. They want nothing to do with this. They're not going to get bonuses off of this. But this is our chance. Like, I'm building this business to change the future of finance, not to make money. I bought Bitcoin a long time ago with Matty Ice, so we don't need to make money. It's not about purchasing power. This is not about cash flow. This is about changing the financial system for the better, for the sake of my children. And I think this is where real change is going to come from. And it starts with products like this. And the good news is even without our doors being open, we've found great product market fit. We have hundreds of millions of dollars of borrowing demand ready to go on day one. And that's not because we've done marketing. That's because we've simply talked about our products and services, and the marketplace listened and realized, whoa, wait a second. This is a good value proposition. I don't need to be convinced to use this product versus a traditional mortgage. I don't need to be convinced to buy the Bitcoin bond and generate cash flow versus a mortgage-backed security. The math is mathing. The incentives are aligned. And people are ready for these types of products and services. People are ready to move beyond the monetization of Bitcoin as digital gold and into the financialization of the asset class, where we really start to see the benefits of incorporating Bitcoin as money, whether it's through Grant's strategy of using those luxury properties to accumulate and drive value on the balance sheet, or whether it's through our strategy where we can de-risk these types of agreements and create a win-win scenario for both borrower and lender.
No, it's brilliant. My question, CJ, is this is your first product that you're rolling out. It's kind of like a fully collateralized or over collateralized loan product. I'm thinking about all the little guys that come to our meetup that have been dollar cost averaging $100 Bitcoin once a month or once every other week, or, even $25 a week or whatever it may be. They don't have, $500,000 of Bitcoin. Maybe they've got 30,000 saved up after a year. And a lot of them message me and they're like, so grateful. So thank you. Like, so thankful. My idea when I wrote that article many years ago was like, how can we use this as a supplementary piece? Maybe it's like a fusion of TradFi and, Bitcoin as an asset where, hey, if you have to pay PMI, let's do the BMI idea. Or, hey, we can't qualify you for this loan because you're high risk.
PMI idea is Bitcoin is brilliant.
Yeah. No, I think it's brilliant too. I love the idea of it. We should do a company where we set it up and then we go, manage it all and talk to the right people. I think it would be brilliant. But also using Bitcoin as a way to maybe reduce your interest rate. Like, hey, you're not qualified for this mortgage or whatever, for whatever reason. But if you post $30,000 of Bitcoin, we'll qualify you. Or, hey, your interest rate is 8%. But, if you post $30,000 of Bitcoin into a multi-sig, we'll bring your rate down to 5.5%, right? And then that Bitcoin sits there, and as time goes on, that Bitcoin, obviously, we talked about this, and Lucas, you mentioned this earlier, the rate of return to beat is the CAGR of Bitcoin, right? I think Jack Mallers talked about this, where it's between 40 and 60% per year over the past 17 years or whatever. I mean, that's the CAGR, right? Like, you got to beat that. So if these, people don't have to sell their Bitcoin and they can buy a house with it, they can use it as this asset that sits there. Maybe they can't, put the full value of $1 million. They want to buy $1 million house. They don't have $1 million of Bitcoin to put down, but maybe they want to buy a $600,000 house and they've got $30,000 of Bitcoin. Well, that $30,000 of Bitcoin today is going to be worth, $3 million in 5 to 10 years, right? So, is there a way? Are you thinking about that at all? I know that there's all this, logistical and bureaucratic nightmare you have to wade through. And you kind of mentioned you didn't want to have to, deal with the New York and California, and you have to because it's private equity. You kind of get around that. How are you thinking about that? Are you thinking of is that a task that People's Reserve might be able to tackle in the future?
First of all, it's a fantastic point, and I wish financial professionals thought like you did, Maddie, because what they don't understand, it's always this: past performance is not a promise of future results. No shit. We get it. All right, makes perfect sense, right? But look at the reality of what's happening here. They don't understand that today's performance, and I'm not even talking about Bitcoin specifically. Look at the S&P, look at housing, look at prices of goods and services. Today's performance in those goods and services is not fully accredited to an increase in demand against a limited supply. A large portion of price increases is due to inflation. It is due to dollar dilution. It is due to the dollar losing purchasing power because of an increase in the amount of circulating units. That is what's happening. You can't create wealth when you just print currency units. It doesn't work that way. And there's plenty of examples to describe that. But Maddie, what they can't do, because they believe that, is they can't look at Bitcoin and understand that Bitcoin credit risk is inverse to TradFi credit risk. So when we are going to buy a home and sell or finance it to somebody, the largest risk is actually within the first year, because within that first year, it's the Bitcoin LTV, in other words, the value of the Bitcoin relative to the loan, it could go above 100% LTV. So in other words, you can be under collateralized because Bitcoin is very volatile. So in the short term, you're not going to get an immediate 40-60% compounding annual growth rate. That's over a longer, a 5-year CAGR.
There's volatility, right? There's a lot of volatility. It could go down 30% this year. There's you can't deny that Bitcoin is a volatile asset, right? So there are up years and down years, but fundamentally over time, it's gone parabolically up to the right.
Exactly.
For the reason described.
And that's what makes it inverse. So in TradFi credit, they call it a term premium. If you borrow money short term, it's actually lower risk. If you borrow money longer term, it's actually higher risk. And that's what formulates the yield curve. And the yield curve goes up because there's a term premium. The longer the loan, the more risk there is, the greater the chance that promise is going to be broken. In the shorter term with strong credit, the lower the risk that promise is going to be broken. The opposite is true for Bitcoin. When we sell or finance a property, the first year, the first 2 years are the most risky from the lender side because of volatility. But over the long term, it's actually let me say it like this. Bitcoin turns TradFi credit duration risk into duration benefit. Because the longer the Bitcoin is there to secure the loan, the more value is going to accrue to the asset. And the more value accrues to the asset, the more value there is backing the loan. So as the liability shrinks, as principal plus interest payments are made, the collateral itself is growing. So the risk of the loan is actually shrinking big time. And this reality is what, to answer your original question, I'm really bad at answering.
Paul, clip that shit what he just said and put it on X.
Yeah,
that's the clip right there. That's the clip.
So to answer your question, I had to lay that groundwork. But what about the guys, the small guys who just started dollar cost averaging Bitcoin? In the last couple of years, they haven't experienced a 5x or 10x or 100x in their wealth, but they know that they don't want to lose their Bitcoin, but they also want to upgrade their quality of life and standard of living. Mm-hmm. We are creating collateralized Bitcoin financing obligations. And this would be just like a collateralized loan obligation or a collateralized debt obligation. It'll be in the separate tranches. You have your senior tranche, which is the least risky tranche, the mezzanine tranche, which is your middle risk tranche, and your equity tranche, which is your high risk tranche. So we're going to come out with multiple CBFOs, collateralized Bitcoin financing obligations. But one of those versions, Maddie, and the senior equity level, you'll have over collateralized Bitcoin loans. In the mezz level, you'll have slightly under collateralized Bitcoin loans. So if you're borrowing $1 million, maybe you only post 500,000 or even 250,000 of Bitcoin. But at the equity layer, at the most risky layer, it's Bitcoin mortgage insurance. You don't have any Bitcoin. You don't have any Bitcoin, but you know the power of Bitcoin, and you want to leverage that power of Bitcoin to reduce risk, therefore reduce interest rate, and over the long term, even reduce the burden of the debt. And what's so interesting about the BMI at the equity tranche, the reason, and typically, your senior tranche pays the lowest yield, mezz, middle, and equity highest because of the risk factors. Well, at the equity layer, when you use a Bitcoin mortgage insurance product, because we as the financier are taking the risk, there will be shared upside. But that's even with that shared, and that's what increases the yield. That's what increases the return for the lender, right? You can't write somebody a BMI at 3.5% and then turn around and only ever collect 3.5%. Well, where's the other yield come from? Where's it come from? The performance of Bitcoin. So now this person they have to put $0 down because they're going to get a BMI. That's where the insurance comes from. And every single month they're paying into the BMI.
I love it.
And under this live talk that we have right now, I put a post that I wrote the other day doing the math on this. But if you put $0 down, you paid into Bitcoin mortgage insurance for 10 years. And it was a small amount. Just go check out the numbers.
It's like a forced.
The house is paid off. If you bought the average single family price home, $400,000 in 10 years, the BMI will be worth like $460,000. So the house gets paid off and the extra 60,000 goes to the lender, which helps increase the yield, which delivers the benefit for that equity tranche. So this is something that we are working on right now. And I think by the end of next year, we will see this hit the marketplace. Now, by the end of next year, we will see this product hit DeFi because we will make liquidity pools and you will be able to get exposure to this. But when it hits traditional side markets, and if it gets graded or not is a whole nother story, but it is coming, and it's all
the underwriting for the main loan. If it's a full equity, you're not putting much down. Maybe you're putting 5, 10, 15, 20% or 3% down with some of these loans. How does that work? And then you're forced to have this BMI, which is going to benefit you over the long run. You just don't know it yet. For a lot of people,
no money down on
regular loan.
Don't put $0 down on the purchase price and kickstart your BMI. So your down payment goes directly into BMI, and then the BMI it's in the amortization schedule. It's already calculated for, much like taxes are typically held in a separate escrow account, but they get calculated into your monthly payment. So
Yeah.
all of this is already calculated into your monthly payment. So don't put money down on principal to lower your interest costs. Let that accumulate, because Bitcoin's growth is going to grow faster than the interest burden. And
Yeah.
then it will actually reduce your interest burden. And I don't really know the exact mechanics yet, because
I guess what I'm asking about is the 30-year loan. That's, is it just a normal 30-year loan that you do through a mortgage broker? And then, if you don't have that down payment, this BMI is a separate product that broker comes to you and says, hey, we want to do BMI. Or, I'm just trying to understand, are you guys doing the full would People's Reserve be, asking for your income and asking for your statements and, hey, why did you send $600 on Venmo last week? That type of stuff.
Yeah, so we have what we call TrueFi, which stands for Truth Finance. TrueFi is our private real estate equity fund. It's a Wyoming-based private real estate equity fund. We buy the properties cash, and then we sell our finance.
Then you're going to decide how you do the financing. Okay, cool.
Yeah, that's very interesting, because I would assume, and correct me if I'm wrong, CJ, that it probably doesn't take a week to get underwritten, pre-approved, and for a consumer to go and be able to purchase a house. I'm assuming it's a much more streamlined process, and from you are essentially purchasing the property and financing it to the consumer.
Exactly, and the other thing is that the proof of promise really doesn't matter. Now, at that equity layer, that equity tranche with BMI, it will matter. So we're going to need proof of income.
Yeah. Okay.
There's TILA, RESPA, a whole bunch of real estate regulations that need to be followed, and they do make perfect sense. They're not like complex; they're just pretty common sense stuff. So at the equity layer, if you're going to use a BMI product, we do need proof of income and things like that. But at the senior tranche layer, where you are fully collateralized by Bitcoin, that is your proof of ability to repay. So getting financing is as easy as just posting the Bitcoin collateral. That's all you need to do. So Lucas had mentioned earlier, hey, I can get up in here and get on my phone, and in 5 minutes, I can get money, whether you're using Coinbase and Morpho or Aave, whatever it is. In a couple of minutes, you can get money. Why is that? Because it's money talks, and Bitcoin is the money. It's not about a proof of promise. It's not a credit promise that you're going to repay. You're posting equity. You're posting 24/7, 365 liquid price discovery asset that is Bitcoin. Nothing else needs to be understood.
What's the most pristine collateral in the whole world? I mean, hands down. There's no more. There is not another asset on this planet that is a more pristine and auditable form of collateral than Bitcoin.
Bitcoin is the new credit score. In the future, I'll end it with this, because I know I got something else coming up here. But Bitcoin will redefine the risk-free borrower in the marketplace. Bitcoin will redefine the risk-free rate of return. And if you want access to the cheapest cost of capital, you better hold Bitcoin, because Bitcoin is the new credit score. Bitcoin is the new status symbol. Bitcoin is the new shaking hands and relationship with your banker. They always just say it's not what you know, it's who you know. Well, now it's not what you know, it's how much Bitcoin you hold. That's the future we're moving into with a Bitcoin-backed credit market.
Lucas, you have any closing thoughts? We're going to hop off here in a minute.
No, CJ, thanks for jumping on, man. Super cool what you guys are doing. I mean, me coming from the residential real estate space, I know how broken our industry is, and how much friction there is, changing things that have just been done the same way for a very long time. And it's not in line with the world that we live in today. So super cool what you guys are doing, man. And where can we learn more about People's Reserve?
Yeah, absolutely. Well, of course, Maddie, thanks for having me. Always a pleasure to be with you. And Lucas, great to meet you.
We could talk for another 8 hours. I mean, we could just sit here all day.
We really could. We go down to the studio, we record for 2 hours, then we talk 2 hours more. But I'm looking forward to seeing everybody at the Nate Bull's Family Office Symposium, and also at Bitcoin Day. And in the meantime, you can learn more about us at peoplesreserve.com. Of course, follow us on Twitter at People's Reserve. Unlike Grant, I don't have all the other BS 3-letter agency platforms where you share all the information. We are on X. That's where I believe our customers are. So at People's Reserve. And then of course, if you want my takes on Bitcoin and macro, you can follow at CJ Constantinos. And I look forward to seeing you guys soon down there in Naples.
Yeah, no, we've got we're trying to turn Naples into a little tech hub here. So we got some cool stuff going on. It's definitely turning into a little Bitcoin hub. So we've got that. I think it's the Naples Wealth and Symposium. I think Michael Saylor might be making a guest appearance at the Naples Wealth Symposium. We've got, I think Grant didn't even know he's coming, but he's coming apparently, according to his team today. So, and then most importantly, Bitcoin Day, which is, an amazing event every single year here in Naples. I mean, it's just like it's like there's not a lot of people that go. It's not like a huge 50,000 people or 500,000 people conference like we have in, I'm exaggerating a little bit, in Las Vegas every year, but which is also an amazing conference, but it's a more intimate setting. You can kind of, get to watch all the panels, get to talk to the speakers, which is pretty cool. So hopefully people will check that out. It's bitcoinday.io. And they just said that if you use my name as a promo code, you get a 21% discount. So thank you guys so much for joining us today. And we'll hopefully chat again next week or in a week or two.
Guys, can I close you out with one final rapid fire question? Should Steak and Shake only accept Bitcoin?
I think I'll start it off here because my answer might be a little bit different than everybody else's. I'm not a Bitcoin maximalist. So I think Steak and Shake should accept every form of payment. And what I also think they should do is hold Bitcoin on their balance sheet as a reserve asset. I don't think there's any reason why you wouldn't accept what your customers want to pay with, because you can easily convert it into whatever you want to hold. So, my thought is enough virtue signaling, accept fucking whatever people want to pay you. And if you can convert it into a different asset, go ahead and do it. But what they should do is absolutely, and I don't think they do this now, which would be nice if they did, is they do accept, Lightning payments and Bitcoin payments, but I don't think they're holding Bitcoin on their balance sheat. And I think that's important, a distinction. It's nice to accept the payment, but if you really want to make a statement, put it on your balance sheet. So that would be my take is Steak and Shake, accept all payments, all crypto rails, but hold some of that in Bitcoin. You can convert it and hold that on your balance sheet.
Definitely. It's crazy that they're not doing that. Doing that trendy thing. People were like, oh, I'm going to Steak and Shake. I went to Steak and Shake and I did the trendy thing. And I said, I'm paying in dollars because I've already bought my single family home. I've already bought my 12 million single family home, right? I'm not buying $100,000 burger. All right? I'm not buying $100,000. Yeah.
There's tax implications and all sorts of stuff, but everyone has to come to their own unique viewpoint on the situation. But we are having our Bitcoin meetup, I believe, in 2 days here in Naples at the local Steak and Shake. So if you want to join us on Wednesday, come to Steak and Shake.
Lucas, do you want to use Bitcoin as Steak and Shake or Haktua coin?
I'll go with the Haktua coin. I think I'm gonna hang on to my Bitcoin for now. I'm gonna use fiat and Hak. Everything else. It's funny because when I try to explain to people, that are getting into Bitcoin, and they ask me, well, at what price will you sell it? I'm like, no, you don't understand. Like, I will sell my house, my car, my watches, my clothes. I will sell anything before I sell my Bitcoin, and I think transacting in Bitcoin, I don't know. I don't know if that's the most efficient way to go about it. Right.
Yeah. I'm having these discussions with a lot of people because there's a big split in the Bitcoin community where people are like, you have to spend your Bitcoin. You have to use it. You know what I mean? And I think the ability to be able to do that is great. That's awesome. And I just tell people, look, I feel disgusting when I spend my Bitcoin, and I can't help how I feel about it. I just feel dirty. I don't know, and it's like, people are like, well, why do you feel like that? I'm like, I don't know why I feel that way. Maybe just because of the fundamentals of Bitcoin as a store of value asset. I don't know. Right. So this is an interesting thing.
And Lucas knows this too. We are on the precipice of the largest transfer of wealth in human history, and it's accelerating. So when it's going to make sense to spend your Bitcoin
after
at the top of the S curve. After it's a store of value first.
Yeah, I agree with that.
Medium of exchange.
So we're still right here on the S curve, and then we're gonna make our way all the way up here, and then maybe I won't feel so disgusting spending some Bitcoin. That's just my thought.
It's like you bought Amazon.com. You traveled back from the future and you bought Amazon.com. And at the very beginning of the internet, You went up to Jeff Bezos back when his desk was a wooden door and 2x4s attached. And you said, hey, I'd love to sell you Amazon.com. But you know where it's going. You know what it's going to be. You would wait until you get the maximum amount of value. And that's exactly what we see here. It doesn't make sense to spend your Bitcoin right now. It will in the future, but let this process play out. Let the transfer of wealth take place. And then you can buy your Sats burger.
And at the end of the day, if you want to do it, you can. That's a beautiful thing, right? So the market gives you freedom of choice. There's no sense like, trying to force other people to do what they don't want to do or what they do want to do, let people make their own decision. So I like the idea of by the time you want to sell your Bitcoin, you won't have to. We'll close it out with that because you can borrow against it. Shitty fiat currency.
I love it. Free market, right? But Steak and Shake did actually listen to the Bitcoin community, and they said that they're not going to accept other currencies, which, hey, I think, I respect that. I respect that they're actually listening to the feedback.
Yeah, but I mean, you're in a vocal, a lot of times you're in a very, like an echo chamber of certain thoughts, the vocal minority of people. So, but I don't know at the end of the day, that's their decision to make. I'm just saying what I would do is accept everything and, hold the Bitcoin.
I agree with you.
As a currency, hold it as
if you're in business, if you're in business, you want to take it all. And then you choose afterwards, how do you want to liquidate that Ethereum into dollars, into Bitcoin? But if you're in business is pretty simple. Get the money in the door,
Yeah, I mean,
Steak and Shake has been making some plays recently, right? They are no longer using seed oils; they're using tallow now to fry it, like they used to back then.
Good for them,
right? And so I'm thinking, that's yet again another very intentional decision there, right? If they were like, hey, maybe we'll use a little bit of sunflower lecithin in there, just a little bit. Because it's cheaper, right? Then eventually you dilute your brand. So I think that making a strong statement, it just goes to show, I think right now the impact the Bitcoin community is having worldwide. Like we're moving the needle. Politicians are catering to us. Companies, businesses are wanting our support. So anyways, I just thought it'd be fun to weigh in on that real quick. And there's so much more to be talked about there. Jeff Booth has this whole, circular economy idea, and that's ultimately how we win, right? But y'all are much more nuanced on the macro elements and stuff. So great to hear your perspectives. Maddie, if you can close us out, CJ.
Yeah, thanks everybody for listening. Check out bitcoinday.io and check out what CJ's working on. Check out what Grant's working on. Check out what Lucas is working on. Lucas will get you that X account here soon. We'll tag you in the post when you're set up. So
sorry, I'm going to throw you and put you on the spot. Lucas wants to sell all his real estate and ape into Bitcoin. So CJ, y'all need to talk.
If you want to do some Bitcoin mining, reach out. Reach out this way because we can set something up for you. Get some cash flow, get some 100% depreciation, do all sorts of fun stuff. Right, guys, it's been a pleasure. Have a great rest of the week.
Thank you so much, guys. See ya. Bye-bye.